The European Union and the Euro crisis. What is it? The European Union is a unique economic and political partnership between its member states. It originated from the European Coal and Steel Community in 1951. It was officially established under its name in 1993 under the Maastricht Treaty, and it is made up of 27 countries. How does the European Union run? The European Commission acts like a domestic government. It carries out many executive functions. It's a supranational organization, and its members act for the interests of the community. The Council of Ministers acts on legislation alongside Parliament. Members represent the interests of their home country. The European Parliament's members are elected directly by the citizens, and it is the weakest of the institutions. The European Court of Justice acts like the U.S. Supreme Court. It handles disputes between the European Union institutions. Voting. Votes are given to each state by its population size. Larger states get more votes, and the total number of votes is 345. Much like the United Nations, the major states hold the most power. Many problems arise from this. Germany, France, Italy, and the UK hold almost 40% of voting rights. This divides European countries and prevents them from moving towards a single European money. The European Central Bank was established by the Treaty of Amsterdam in 1998. It controls the monetary policy of the Eurozone. It takes care of the reserves of the European system of centralized banks and conducts foreign exchange operations. The European Financial Stability Facility was incorporated in the bank in May of 2010. The euro is shared by 17 of the 27 member states. This makes up the Eurozone, and the remaining states keep their own currency. Many problems arise from this. The euro crisis. It began with a balance of payments problem. The euro countries developed a large external debt, and because there is no flexibility of a floating currency, deficit countries cannot become surplus countries. The consumer confidence went downhill as it spread from Greece to Portugal to Ireland, and the European Central Bank let nothing in the way of lowering headline inflation. This caused a collapse in demand and threatening bankruptcy. Failed attempts to fix the crisis have only worsened the situation. The European Central Bank raised interest rates in order to lower prices. This caused the euro economy to contract and the euro countries to go into recession. The European Central Bank has been buying government bonds. Yet, markets need a guarantee. They're just getting rid of the risky bonds for now. As European banks approach their funding limit, American money market funds have pulled back from Europe. Lending has been cut back by tighter capital regulations. Short-term funding markets have dried up. There is no interest in government bonds by investors. Banks are withdrawing from markets, and some banks are at risk of bank failure and might trigger bank runs. Many solutions have been offered, but coming up with a solution to this crisis is difficult because there are so many countries and no set agreement. Many have suggested each country go back to its original currency. This would cause a collapse of the Eurozone, and business contracts to fail because of the settled currency. Others suggested national budgets be presented as federal law to all Euro states. This would be difficult for the states to come up with an agreement and to comply with the laws. The issuance of federal bonds has been something that they've been trying, yet consumer confidence is low, and so it is difficult for the bonds to sell. How this affects us. Europe makes up about 20% of the world's GDP. Having their economy collapse could send many other economies into recession. As their euro value goes down, the US dollar would increase. Exports would decrease, and this would lower the US GDP. Many emerging economies would slow down, since Europe is responsible for most of the funding. As the year goes on, keep your eye out on the news. to see what economies are affected and what solution is finally reached.